We must protect the position of the American dollar as a pillar of monetary stability around the world.
The potential collapse of the U.S. dollar is a concern that could have severe consequences for the global economy. According to a study by the Peterson Institute for International Economics, there is a 50% chance that the dollar will lose its status as the world's reserve currency within the next 20 years. This highlights the real possibility of a major shift in the global economic landscape. A decline in the value of the dollar would make it more expensive for countries to buy and sell goods and services, potentially leading to a slowdown in global trade. The current U.S. national debt stands at over $30 trillion, which could easily exceed $50 trillion or more if the dollar were to collapse. The International Monetary Fund, IMF, conducted a study that found a 10% decline in the value of the dollar would reduce global trade by 1.5%. In 2008, when the U.S. dollar declined significantly, there was a surge in demand for gold. The price of gold rose from $600 per ounce to over $1,500 per ounce. In 2015, when the value of the dollar declined again, there was another surge in demand for gold. The price of gold rose from $1,100 per ounce to over $1,300 per ounce.
Our currency is crashing and will soon no longer be the world standard, which will be our greatest defeat, frankly, in 200 years. There will be no defeat like that. That will take us away from being even a great power.
The collapse of the dollar could lead to a financial crisis, with investors rushing to sell assets denominated in dollars. This could result in a decline in stock prices, a rise in interest rates, and a slowdown in economic growth. The global financial crisis in 2008 serves as an example of the severe repercussions that can arise from such a crisis. A weakened dollar would make it more expensive for Americans to buy goods and services from other countries, as the dollar's value would be lower in terms of foreign currencies. This would impact the purchasing power of consumers and potentially lead to higher import prices. Inflationary pressures would be a significant consequence of the collapse of the U.S. dollar. A decline in the value of the dollar would lead to increased inflation in the United States, as the prices of imported goods and services would rise. This puts upward pressure on prices in general. Commodity prices would also surge, particularly for commodities priced in dollars, such as oil and gold. This would impact industries reliant on these commodities and could potentially lead to inflationary pressures. For example, during the 2008 financial crisis, there was a surge in demand for gold, leading to a significant increase in its price. A collapse of the U.S. dollar would likely trigger a surge in demand for alternative currencies and assets perceived as more stable. Cryptocurrencies, such as Bitcoin, could gain increased relevance as decentralized digital currencies not tied to any specific government or central bank. Gold, historically considered a store of value, is also expected to experience increased demand. Blockchain technology, the underlying technology of cryptocurrencies, has the potential to revolutionize financial systems and facilitate secure and transparent transactions. According to a survey conducted by UBS, 70% of central banks plan to increase their cryptocurrency holdings by 2025.
The dollar. Looks like they're dumping it.
The world's largest oil producer, Saudi Arabia, is reportedly asking to join BRICS.
As more and more developing nations, including some of the world's largest economies, decide to ditch the dollar in their bilateral trade, voices of concern and even despair are being heard in the US over the looming end of America's global financial dominance.
Countries may implement protectionist policies to shield their domestic industries from the economic shock caused by the collapsing dollar. This could result in trade wars and further disrupt global economic relations. The current trade tensions between the United States and China serve as an example of the potential consequences of protectionist measures. Countries heavily dependent on U.S. dollar-denominated debt, such as emerging economies, would face significant challenges in servicing their debt. According to the Bank for International Settlements, dollar-denominated debt held by non-U.S. entities stood at $12.6 trillion in 2020. A collapse of the U.S. dollar could lead to debt crises and further economic instability in these countries. The collapse of the US dollar may prompt calls for significant financial reforms and a reevaluation of the global monetary system. Discussions could focus on the need for a new global reserve currency or alternative mechanisms to stabilize the international economy. Historical examples include the establishment of the Bretton Woods system after World War II and the creation of the Basel Accords in the 1980s. We make 5-minute videos on current issues. Support us through your likes, share, and subscribe our channel as well.
India and Malaysia, two of the biggest economies in the world, announced they'll be settling their trade in their own currencies, not the dollar. Even France, which we liberated, is using Chinese currency in a new liquefied natural gas trade. This is happening around the world, and all of it is shutting out the US dollar. And it's happening a lot faster than anybody could have predicted.
A collapse of the US dollar could lead to an increase in government borrowing costs for the United States. This would add to the already substantial national debt burden. A study by the Congressional Budget Office found that every 1 percentage point increase in interest rates would increase the federal deficit by $1.9 trillion over 10 years. International settlements highlighted that dollar-denominated debt held by non-U.S. entities stood at $12.6 trillion in 2020. Investors and central banks could diversify their foreign exchange reserves away from the U.S. dollar, leading to a process known as de-dollarization. Countries like Russia, China, and Turkey have already taken steps to reduce their dependence on the dollar. For example, Russia increased its holdings of euros, Chinese yuan, and gold. The collapse of the US dollar would impact global financial institutions such as the International Monetary Fund and the World Bank. These institutions are predominantly denominated in dollars and rely on the stability of the dollar for their operations. A decline in the dollar's value could undermine their effectiveness and necessitate reforms. Inflation expectations would become more volatile in an environment of dollar collapse. Businesses and consumers would face uncertainty about future prices, which could lead to reduced investment and spending. This could further weaken economic growth prospects. Countries heavily reliant on remittances, such as Mexico and the Philippines, could face significant challenges. A collapse of the US dollar would reduce the value of remittances sent from overseas, impacting the income and consumption patterns of households that rely on these funds. A study by the Pew Research Center revealed that the wealth gap in the U.S. has widened by 50% since 1980, while the World Bank estimates that a dollar collapse could push an additional 100 million people into poverty globally.
When the dollar crashes, that's actually going to be a net positive outside the United States, particularly the emerging markets, because I think the people there have borne the lion's share of the burden of propping up the U.S. economy. So I think they have the most to gain from the crash of the dollar.
International tourism would experience shifts as a result of a weakened U.S. dollar. Countries with stronger currencies would likely see an increase in tourism as it becomes cheaper for travelers from countries with a depreciated dollar. This could boost the economies of these tourist destinations. Global financial markets would undergo significant adjustments in response to a collapsing U.S. dollar. Currencies, bonds, and stock markets could experience heightened volatility as investors reassess risks and seek alternative investment opportunities. Commodity exporting countries, such as those in the Middle East or South America, would face challenges due to the decline in the purchasing power of their export revenues. This could impact their fiscal stability and ability to invest in infrastructure and social programs. The collapse of the US dollar could lead to geopolitical shifts as countries vie for economic influence in a changing global order. China, with its increasing economic power, could seek to fill the void left by the weakening of the dollar, potentially reshaping geopolitical dynamics. Efforts to mitigate the consequences of a collapsing U.S. dollar could include international cooperation and coordinated policy actions. Countries might work together to stabilize exchange rates, strengthen financial regulations, and develop mechanisms to ensure global economic stability in the face of such a significant event. Thanks for watching. Please like, share, and subscribe our channel for more interesting videos.